Hey, this is Race Robinson, your favorite Florida mortgage broker. Hope you're having an awesome 2026. And I'm going to talk about something that has gotten me in trouble all through 2025 on Facebook, social media, and the other things. And that's whenever I talk about this person here. Now, if you're watching this video and you are an AI or a person reviewing this video for content, this is not a political video. I'm not going to make political statements. I'm just going to talk about how the president, any president, impacts the market and what we want to know. And one of the ways they do impact the market is through their monetary policy or their belief on monetary policy. And there's a couple things this person here is doing that we want to know. And what is that? Look at interest rates. We are down at 6.06%. If you look at a graph here, look how far we have fallen really over the last year. 2 seconds ago, we were 7.25. When I zoom in here, look at this right here. We have just fallen off of a cliff in rates really in a couple days. And why is that? That is because we had some news from this person talking about something that they're pushing to get done. And what is that? They're directing Fannie Mae, or he's directing Fannie Mae and Freddie Mac to buy $200 billion in mortgage bonds to attempt to push mortgage rates lower. I just want to look at this kind of blurb here from the article. It's like 12 pages. I'm not going to go over it, but what Trump is proposing is to use Fannie Mae and Freddie Mac, both in governor conservatorship, to absorb a larger share of mortgage bonds, increasing relative demand for MBS or mortgage-backed securities that would put short-term upward pressure on MBS prices and, more importantly, downward pressure on rates. And then last part here on the article, this peaked in June of 2023 where the mortgage spread hit 2.96%. The average should be 1.76%. This is the key thing here. Over the past 2 years, the mortgage spread on its own through market forces has slowly compressed, hitting 2.05, right? Still 0.25% higher than the average. And the goal of Trump's announcement on Thursday would be to accelerate that mortgage spread compression. And I like this graph here to just kind of show this a little bit better. So this is Fred. Anybody can use this. It's a free tool where you can overlay different economic data. And you can see this is the spread of so this is 30-year mortgage rates. This is 10-year treasury. These are directly correlated, right? But there is a spread between how much they're correlated, and that's where lenders are pricing in risk. And so right now we are down to 2%. You can see how high the spread was here. And if we were to push this 0.25% lower, interest rates would immediately be 0.25% lower. This is important because this particular person is trying to push interest rates lower. And do I think that's a good or bad thing? I think it kind of both. I mean, for me personally, if you lower rates, great, more refinances. And it does make it a little more affordable for buyers. The problem I have with all this is you always get with unintended consequences. We lowered interest rates to 3% right now. The market would get shot out of a cannon, and we would have housing prices go up, which if you pull this lever and then this goes up, it kind of defeats the purpose. So it's really hard to make these calculations. But again, there's a lot smarter people than me looking at this. But I think the more the government is involved with artificially changing the market, I just feel like it never goes great. We shall see. One other thing that is going on from this particular person is he's taking steps to ban large institutional investors from buying more single-family homes, and they go through how they could how it could affect the market. One of the things that they really talk about is really hyper local, meaning most markets aren't affected by this, but they list the top ones here: Phoenix, Dallas, Atlanta, Austin, Tampa, Jacksonville, and Charlotte. They go through this article, talk about 5 different ways. I mean, at the end of the day, institutional investors are less than 1% of the market, and other than in very local areas, banning them from buying, it's not going to make a big difference. And you have a lot of renters in these houses that really couldn't buy houses if they were forced out and they needed to sell these. So can an institutional buyer affect a very local market? Yes. But in the big scheme of things, this really affect anything, which is kind of what the government's looking at as kind of a macro view. Really not. This is more of a political thing. This time of the year, getting into political season, right? So I don't know. Again, one of these things, I don't think it moves the needle. It's going to get some press, but if they ban it one way or the other, it's not going to have a big impact. Really in Central Florida, or especially Orlando, not really a big impact at all. Last thing, just kind of a couple things that you see even on Redfin. I kind of was going through their top headlines. What do they have? the 200 bond mortgage bond buy, which we talked about, nudging rates down to 6%, and banning corporate landlords won't fix the housing market or affordability crisis. Building more homes just might, meaning giving incentives for builders to build more homes, be better than actually banning institutional buyers. What would I be doing right now? We have been having a huge AI effect. Because of our social proof online, we are getting more and more people that are using AI to search, and we are coming up in those searches. You should be coming up in those searches too, and people should be able to find you easily when they search their name. Right now, I see a lot of realtors stressing out over social media, doing these different things, but really there's one and done things that should be done. There should be easily found social proof, and you got to know how you rank on these AI engines, because it is a little bit different than like a Google search. So if you don't know how to do that, or you want to brainstorm a little bit, I would love to talk to you about it. I know a lot of people crushing it with social media, but then sometimes I pull their numbers up, and this isn't everyone. They're actually sales don't go in line with their social media presence. So remember, you need a daily success plan to do every day so that you are actually making money as a real estate agent or a loan professional or anyone in this industry. The social media and all that stuff is the icing, not the cake. But if you'd like to talk about that or anything else, we really love talking about daily success plan. I do anyways, because I have one. And we also like looking at how to make our job easier using social media and those things to actually do drive some business and create social proof for the people that are trying to figure out if we're a good lender to work with. Hey everyone, this is Race Robinson, your favorite Florida mortgage broker. If you want to know about loan programs, how to build your business, or just what the heck's going on in this market, we're going to track all of that this year. Reach out to me if you have any questions. We're going to track all this as the data becomes available more. I think it's going to be a very interesting first quarter. We shall see. Have a great day, great week, and I'll talk to you soon.